Welcome to Words of Stardom. This is CH. I will be covering the Eastspring Singapore Select Bond Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the PIMCO GIS Income Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. Eastspring was originally the investment management arm of Prudential Corporation Asia, the Asian branch of Prudential plc that was established in 1994. Prudential plc is a leading UK-based global insurance company. In 2012, the business rebranded into Eastspring Investments for better branding and corporate identity reasons. It remains a subsidiary of Prudential plc. Eastspring is a decently large Asia-based fund provider, currently managing over $286 billion of assets through 400 investment professionals. Given the history of the business, product offerings are primarily Asia-focused equities, fixed income, and multi-asset mutual funds. The firm also mainly focuses on Asian clients with presence in 10 Asian countries, although there are efforts to expand to US and Europe. The Eastspring Singapore Select Bond Fund is a sub-fund under the Eastspring Investments Unit Trust or EUIT fund family. EUIT is set up as a Singapore-constituted umbrella unit trust and houses 6 sub-funds currently. EUIT in turn shares the same prospectus with 2 other fund families as seen here. The fund is registered as a MAS authorized scheme, which means it is suitable for retail investors. Eastspring is one of the few fund providers I've come across that doesn't provide any information on the fund manager on its website or fund documents. I do find some value as an investor in understanding the people behind the product and their credentials, as well as the stability of the team. So hopefully Eastspring can improve in this area. Morningstar lists Danny Tan as the only fund manager since the fund inception in 2011. Danny's bio is found in the fund prospectus as one of the key executives, given he is the head of fixed income in the firm. His experience seems to cover across multiple asset classes based on the bio. The Eastspring Singapore Select Bond Fund has a pretty straightforward investment objective, that is to maximize total returns by investing primarily in bonds and obtain only Sing dollar exposure, either via natural Sing dollar bonds or hedge non-Sing dollar bonds exposures into Sing dollars. The investment objective doesn't elaborate on the type of bonds or other details, so let's go through the prospectus. The prospectus provides more clarification on the investment objective. The fund will invest primarily in Sing dollar bonds that can comprise of Singapore government bonds or government-affiliated bonds, investment-grade and unrated corporate bonds from Singapore companies, and also investment-grade bonds from outside of Singapore. There is no restriction on the limits of any of these categories, so hypothetically, the fund can shift from a 100% Singapore government bond portfolio to a 100% investment-grade corporate bond portfolio with no Singapore issuers. The only restriction given is a max 30% in non-Sing dollar exposures. As mentioned earlier, any of such exposures will be hedged back into Sing dollars. Some investment process information is provided in the prospectus, which is good. The fund uses a blend of top-down macroeconomic view and bottom-up credit selection process, commonly seen in bond funds. The top-down process analyzes economic and market data to establish duration, yield curve, and credit strategies. The bottom-up process includes credit research and analysis of bond issuers to look for value opportunities and manage credit risk. There is also a brief mention of risk management aspects involving the risk-return trade-off assessment of individual positions, as well as market scenario stress testing on the portfolio. The fund is expected to be adjusted dynamically according to market conditions, so the portfolio exposures can potentially change significantly over time. The benchmark of the fund is the Market iBoxx ALBI Singapore Index. The benchmark is used only for performance comparison though, so the fund is actively managed and can have a portfolio construct and exposure different from the benchmark, leading to potential performance deviation. Let's try to understand the benchmark index a little. The Market iBoxx ALBI Singapore Index is one of the many indices under the S&P Dow Jones Indices business. The index appears to be almost a pure Singapore-issued bond portfolio, with about 70% Singapore government bonds and 30% government-affiliated and investment-grade corporate bonds. There is no mention of currency exposure, though I imagine this index to be fully Sing dollars. As the fund strategy can invest up to 30% in non-Sing dollar issues, this means the fund has a broader investment scope than this index. I can't seem to find any ETFs that track this index, so I probably can't put this in Morningstar for performance comparison later. The Eastspring Singapore Select Bond Fund was incepted in 2011, giving it about 14 years of track record now. Fund AUM is over 1.4 billion Sing dollars, which is a decent size for a Singapore-focused bond fund. Portfolio details are presented in the fact sheet without any fancy graphs or charts, but is pretty comprehensive. Singapore government bonds take about one-third of the portfolio, as per deduced from the sector and ratings allocation, as well as from the top 10 holdings. We can also see from the top 10 holdings, these government bonds are generally of longer maturities above 10 years. The rest of the portfolio is about one-third in Singapore corporate bonds and another one-third in non-Singapore corporate bonds. Most of these are issued by finance-related companies such as banks and insurance firms. These corporate bonds appear to be all investment grade or unrated. It is quite common to find unrated Sing dollar bonds as the issue sizes are small and the investor scope is limited. Therefore, issuers sometimes do not bother to get the bonds rated by the credit agencies. In this case, while it is not mentioned in the prospectus, bond funds typically have an internal credit rating model to determine how to categorize these bonds. Morningstar indicates the fund portfolio currently has 156 underlying bond holdings, which looks diversified enough for the current fund size. There is unfortunately no information on the average duration or average maturity of the portfolio, though looking at the maturity allocation, I would estimate average maturity to be easily above 7 years. This would probably mean the fund is quite sensitive to interest rate movements, unless there are active duration hedging strategies being done in the portfolio. Morningstar estimates the weighted coupon is 3.5%, and we will see later whether this is similar or different to the distribution payout yields of the fund. The Eastspring Singapore Select Bond Fund currently has only 3 share classes that are all in Sing dollars. A refers to retail share classes that have a management fee of 0.5%. Adding other expenses gives a total expense ratio or TER of 0.6%. Up to 65% of the management fee can be paid by Eastspring to distributors as trailer fees. Distributors can charge up to 3% subscription fees for A share classes, although I think 1% or lower for bond funds makes more sense. I refers to institutional share classes that is normally not accessible for retail investors. It has a lower management fee of 0.35% and TER of 0.45%, with no subscription fees allowed. This would be the cheapest share class if you are able to access it. A share class has an AD quarterly distribution version. I will go through the distribution details next. There aren't any proper details on the distributions of the Eastspring Singapore Select Bond Fund, except that the fact sheet shows the last distribution date and the amount for the AD share class. Fortunately, Morningstar has a record of the past 10 distributions. From the data, we can see that the AD share class doesn't have a strict smoothen payout policy, although the payout amount seems to be capped at around $0.011 every time. This translates to around 4.3% per annum payout yield for the share class currently. Given Morningstar also indicates the portfolio has a weighted coupon of around 3.5% currently, this means that the fund will use some capital or capital gains to top up to the distribution payout. The distribution payout yield at 4.3% per annum does look a little high for the portfolio though, as we can see from this chart comparing the NAV versus total return, that while there is some NAV recovery in the past few years after the market correction in 2022, it is still a distance from the prior peak level. I think it would be better for the share class to prioritize recovering the NAV back to the prior peak level than focus on the payout yield. The Eastspring Singapore Select Bond Fund webpage has a dynamic performance chart with editable time periods, although it doesn't include the benchmark for comparison, so it is not too useful. The webpage also has a table showing returns across various time periods, and the table does include benchmark numbers. It is, however, better to refer to the fund fact sheet instead, as there is also calendar year returns for the past 5 years. As usual, I will ignore the offer bid data as it includes a hypothetical subscription fee and therefore is not an accurate reflection of the fund performance. The fund appears to have a slight outperformance versus the benchmark on longer term basis when we look at 3, 5, 10-year and since inception periods. 1 year and year to date are slightly weaker than the benchmark, although they are already pretty high returns compared to long-term numbers. Calendar year returns gives us more insight on the performance, showing the fund has been more volatile than the benchmark, with larger magnitudes in both up and down years. This is due to the differences in the portfolio construct. As mentioned earlier, the benchmark, which is Market iBox ALBI Singapore Index, is roughly around 70% Singapore government bonds, plus 30% Singapore IG corporates. The current fund portfolio, on the other hand, is around 1/3 Singapore government bonds, plus 1/3 Singapore IG corporates, plus 1/3 non-Singapore IG corporates. These differences will therefore lead to the deviations in performance. Let's run some Morningstar chart comparisons. I have been covering mainly the Singapore-focused short-duration bond funds, and it is clear in this chart that the Eastspring Singapore Select Bond Fund doesn't fall in the same category. Eastspring has a higher return potential, but also higher volatility, as seen in the larger up and down movements in its performance line over time. Here is a 10-year chart with other more appropriate competitor funds from Fullerton, Lion Global, Schroders, and UOB-AM. Given the portfolio allocation decisions between Singapore and non-Singapore, as well as between govies and corporates, will significantly impact the performance of a fund, we can see here that these funds have resulted in rather different returns, despite having decently high correlation during this time period. In this case, Eastspring looks to be a clear leader. Shifting to a shorter 5-year chart and adding 2 more products from HSBC and Manulife, we can see that Eastspring still remains the leader, although the gap versus United and Lion Global are less significant in this chart. So the Eastspring fund looks to be a strong performer in its category. But wouldn't a global bond fund do better than a Singapore-focused or Sing dollar-focused bond fund? As it turns out, this is where currency hedging impacts come in. Here is a 10-year chart comparing Eastspring with the popular PIMCO GIS Income Fund. While on base currency US dollar terms, PIMCO would have performed better, the Sing dollar hedging cost in the Sing dollar share class has reduced the returns to a level where it is actually on par with Singapore-focused or Sing dollar-focused bond funds. In this case, we can even see in the chart that Eastspring has had a better eventual return and also a lower volatility. especially during the start of COVID in 2020. Of course, it is still useful from a diversification perspective to invest in both products. With that, let's summarize our findings. Eastspring Investments is a subsidiary of Prudential plc, a leading UK-based global insurance company. It is a decently large fund provider in Asia and specializes in Asia-related solutions. The fund manager and the investment team is completely not mentioned in the fund webpage or documents. It would be good if Eastspring includes this information so that investors can at least have a brief understanding of the people behind the product. While the fund appears to have a straightforward objective and a simple investment strategy, it is not clearly worded whether it is a Singapore issuer-focused strategy or Sing dollar-focused strategy. There is nothing wrong either way, just that they will lead to slightly different outcomes. This leads to performance deviations versus the benchmark index, as the index is Singapore issuer-focused, while the current portfolio of the fund is Sing dollar-focused, but have a notable exposure in non-Singapore issuers. The portfolio information provided in the fact sheet is pretty concise, without using unnecessary fancy graphs and charts. It is, however, lacking some key portfolio data, such as average duration and yield to maturity. Distribution yield of the AD share class looks a little bit high. It would be good if the fund can prioritize improving the NAV growth a bit more. The fund has a strong performance, not just within Singapore-focused and Sing dollar-focused bond funds, but also compares well against leading global bond funds in Sing dollar terms. In conclusion, while the fund isn't doing so well in providing fund information in its webpage and documents, the strong performance is a key selling point. This is one of the better performing Singapore buyers and Sing dollar-focused bond funds in the market for investors. This concludes my absolutely biased comments on the Eastspring Singapore Select Bond Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.